Investing for Beginners, a step-by-step guide to growing your wealth. Imagine waking up one morning, checking your investment account, and realizing that your money has been growing even while you were sleeping. Sounds too good to be true? It's not. That's one of the biggest advantages of investing. While many people spend their entire lives working for money, smart investors learn how to make their money work for them. The problem is that investing can seem confusing. Stocks, ETFs, mutual funds, dividends, bonds. There are so many unfamiliar terms that many beginners decide not to invest at all. And that could be one of the most expensive financial mistakes they'll ever make. In today's video, I'll walk you through investing step by step, using simple language that anyone can understand. By the end of this video, you'll know exactly how to begin your investing journey with confidence, even if you're starting with very little money. So, if you're ready to take control of your financial future, hit that like button, subscribe to the channel, and let's get started. 1. Understand why you're investing. Before you invest a single dollar, ask yourself one simple question. What am I investing for? Your answer matters because it determines how you should invest. Maybe you're saving for retirement. Maybe you want to buy a house. Maybe you're building wealth for your family. Or perhaps you're simply looking for financial freedom. Your goal becomes your roadmap. Without a destination, it's impossible to choose the right path. Successful investing always begins with a clear purpose. 2. Build your financial foundation. Here's a mistake many beginners make. They rush into investing without preparing for emergencies. Imagine investing all your savings. Then your car breaks down, or you lose your job. You may be forced to sell your investments at the worst possible time. That's why it's important to have an emergency fund before investing heavily. Aim to save at least 3 to 6 months of essential living expenses. Also, pay off high-interest debt, especially credit card balances. If your debt costs 20% in interest every year, it's difficult for investments to consistently outperform that. Strong foundations create stronger financial futures. 3. Learn the basic investment options. Now let's simplify the different types of investments. Stocks mean owning a small piece of a company. If the company grows, your investment may grow too. Bonds are loans you make to governments or companies. They're generally more stable but often provide lower returns than stocks. Mutual funds combine money from many investors and are managed by professionals. Exchange-traded funds, or ETFs, work similarly but usually have lower fees and can be bought and sold throughout the day like stocks. For many beginners, broad market ETFs are a popular way to invest because they provide instant diversification. Instead of relying on one company, you own small pieces of many companies at once. It's a simple way to spread your risk. 4. Start small. One of the biggest myths about investing is that you need thousands of dollars. You don't. Many investment platforms allow you to start with surprisingly small amounts. The important thing isn't how much you start with. It's that you start. Imagine planting a tiny seed today. Years later, it could become a massive tree. Investing works the same way. Small, consistent investments often outperform waiting years for the perfect time. Remember, time in the market usually matters more than trying to perfectly time the market. 5. Invest consistently. Here's where real wealth begins. Consistency. Rather than trying to guess when the market will go up or down, consider investing a fixed amount regularly. For example, you might invest every month after receiving your paycheck. Sometimes prices will be high. Sometimes they'll be low. Over time, this approach helps smooth out market fluctuations. Instead of worrying about daily headlines, focus on building the habit. Investing isn't a sprint, it's a marathon. 6. Let compound growth work. Earlier, we talked about compound growth. Here's why it's so powerful. Your investments may earn returns. Then those returns can generate more returns. Over years, and especially decades, this effect can dramatically increase your wealth. Imagine rolling a small snowball down a snowy hill. It begins tiny, but as it rolls, it grows larger and larger. That's exactly what consistent investing and compound growth can do. The earlier you begin, the greater the potential impact. 7. Don't let emotions control your decisions. This step separates successful investors from unsuccessful ones. Markets go up. Markets go down. That's completely normal. When prices fall, many beginners panic and sell. When prices rise, they rush in because they fear missing out. Both reactions are driven by emotion. Successful investors stay focused on their long-term goals. They understand that short-term market swings are part of investing. Patience is often more valuable than perfect timing. 8. Keep learning. The best investors never stop learning. Read books. Listen to finance podcasts. Watch educational videos. Learn about personal finance, investing, and wealth building. The more knowledge you gain, the more confident you'll become. Every lesson helps you make better financial decisions. Remember, investing isn't gambling. It's a skill. And like any skill, it improves with education and experience. Common mistakes beginners should avoid. Before we wrap up, let's quickly cover a few mistakes you should avoid. Don't invest money you'll need next month. Don't put all your money into one investment. Don't chase get-rich-quick schemes. Don't let fear stop you from getting started. And don't expect to become wealthy overnight. Real investing is about steady, long-term growth. Final thoughts. Let's review the steps. Know why you're investing. Build a solid financial foundation. Understand the basic investment options. Start with what you can afford. Invest consistently. Let compound growth work. Stay calm during market ups and downs. And never stop learning. Remember, the goal isn't to become rich overnight. The goal is to make smart financial decisions that can improve your life for years to come. The best investors aren't always the smartest. They're often the most patient. Your investing journey doesn't have to begin with thousands of dollars. It just has to begin. If you found this guide helpful, don't forget to like, subscribe, and turn on the notification bell so you never miss more videos about investing, budgeting, personal finance, and building lasting wealth. Now, I'd love to hear from you. What's the biggest question or fear you have about investing as a beginner? Leave your answer in the comments below, and let's learn together. Thanks for watching, and I'll see you in the next video.